Let's welcome in our next guest on the show. Hiren Ved, Director and CIO at Alchemy Capital Management Private Limited, is now joining us. Hiren, a lot has been spoken about in terms of markets, how essentially earnings would come. Where would you stand? Would you be bullish on Nifty at these levels of 9,000, 9,100?
Yeah, I think, we have to understand that we are in the early stages of an earnings recovery. In fact, if you actually look at the numbers, earnings were on the path to recovery in the second quarter of this fiscal year, which is ending. But because of demonetization, we had a break of, let's say, 2 quarters. So let's say we had part of third quarter, which got impacted. The first half was good because the Diwali season was in October, but then November, December was bad. And then, Jan, Feb, and then March has again started to improve. So I think if you take out these 2 quarters, then I think that you should be looking at a decent earnings recovery in FY18. And we have to understand that at turning points, it is always the P which expands first and the earnings which will follow later. I think that's what we are experiencing at this point in time.
So, after the Avenue Supermarket IPO, what happened was the buzz was that, essentially it's a similar IPO like Reliance Power, or it got a response like Reliance Power, plus markets are at a high. So we are back to the situation of 2008. But in terms of earnings expectation, it's nowhere even closer?
No, I think I would beg to differ that, yes, well, I would say that there is, definitely some sort of a euphoria which is building up in the IPO markets. But we can't compare 2007-8 to where we are today. In 2007-8, we were at cyclically high earnings. Today, we are at cyclically low of earnings, right? And the excitement in the IPO market is happening because now, after a long time, we are seeing a structural shift of domestic capital moving into equity markets. And those people who have not been able to participate meaningfully in the secondary market are using the IPOs as an entry point to shift their capital allocation away from fixed income and hard assets to equities. And I think that's what's happening in the IPO market.
Right. So if I just look at the markets where they are, the sort of FII, DII investment which is expected, say if the earnings come in Q4, which is likely to come, or maybe Q1 of FY18 with the recovery, do you think more capital can easily come into the markets?
You mean domestic or international?
Any of the capital in the market. Do you think once the signs of earnings recovery are back again, further movement into markets would happen on the positive side?
Absolutely. There is no doubt about it. I think at the first hint of a double-digit earnings growth in any of the quarters would, definitely bring in more capital into this market. I think domestic capital is structurally on an up move, and I think that FI money has also turned around the corner, because the whole Trump rally and the dollar trade, which restricted flows to emerging markets in the initial phase, is now turning around. And with the gain in the rupee that we have seen, it's a big positive for FIIs, because every year they would lose somewhere between 3 to 5% a year on rupee depreciation. Now you're looking at a situation where the rupee is appreciating. So they get to play both. They get to play India equities, and they also gain because of the appreciation in the currency. So I wouldn't be surprised if our macro remains the way this is, and I see no reason why it should not remain strong. That you will see strong FII flows, but more importantly, my call is that over the next 2 years, you will see phenomenally strong FDI flows into this country.
Right. In terms of 2003 to 2008, constantly earnings went up, things became better in the banking space, in sectors where there was expected that, there will be no recovery. So once the earnings recover, they can easily grow 15 to 20% despite the base effect. That is something which investors have forgotten.
Yeah, we have to see that if you look at the phase between 2000, actually the earnings started to improve from 2003-4 fiscal and accelerated well up to 2000, mid 2008, right? Earnings were compounding at 30% a year, almost 25% plus. There were some years when it was compounding at 30%. But that was a cycle where we had a credit boom cycle, right? So you had not only operating leverage, but you have massive financial leverage in the corporate sector. And that was basically compounding earnings growth. What we now have is a classical deleveraging cycle, right? Credit growth is not very high. So I would say that you will not get that level of compounding, but I think 15 to 20% is possible and achievable.
Right.
I think if the monsoon is reasonable this year, then I think you can shoot for a 15 to 20% earnings growth this year.
Right. One of the things about any deleveraging cycle would be that there would be a lot of assets which are for sale and good assets which companies have taken debt and not been able to take good returns. So a lot of big companies that are generating free cash flow or have cash available at very good amount of rates, you expect them to acquire a lot more assets?
Oh, definitely. I think we are at the beginning of a new cycle. And what eventually happens is that the stronger companies with access to resources and stronger balance sheets are likely to, buy some cheap assets if available. And you will see a flurry of M&A and restructuring that will happen this year.
Right. So, we've already seen Idea Vodafone in terms of a big merger. Kotak is expected to do a big M&A announcement into a different sector today. Do you think that, it'll be large cap M&As which will drive synergies for Nifty earnings? I was looking at the top 200 companies in terms of Sensex and Nifty, in terms of BSE and NSE. And the free cash flow generated by some of the companies is still very strong. So do you expect that large cap companies would do M&A which would drive a lot of synergy benefits also?
Absolutely. See, there are two kinds of companies who can do an M&A. One is those where their own valuations are at a premium, which means they use their currency, they use their stock price as a currency. And second, you will have companies that have a very strong balance sheet and free cash available in the balance sheet to do M&A. The government is trying very hard to resolve the NPA problems of the banks. And therefore, incrementally, you will have a lot of assets which will be available to buyers. And I think the strong guys will definitely want to fortify their position in their respective industries. And that's what we are beginning to see already.
Right. If the M&A cycle happens as expected, irrespective of that, you believe earnings would grow, and they would grow from which sectors according to you? So banks, pharma, IT has done well on a YOY basis. Will they continue to lead the earnings?
I think earnings are still going to be led by financials. They would be led by, consumers, discretionary. IT could probably see some headwinds, the large cap IT, because of the rupee appreciation. And, while from a valuation perspective they are cheap, but I'm not too sure whether they will contribute any significantly to earnings growth. But you will have some of the more cyclical oriented sectors in the economy like cement, for example, or autos, private banks, maybe, some infrastructure companies which will show good earnings growth in fiscal 18. As we know that this government now has, oils again scaled back a little bit, which is good news. The rupee is strong. And if they are able to collect good tax revenues this year because of better compliance and GST, then they will have the ability to spend that money up front. And I think that's what the government is trying to do. I think yesterday they came up with a first half borrowing number, which is pretty aggressive. And, one of the reasons of preponing the budget date was also that they could start spending early into the cycle before the monsoon hits.
Right.
So I think you're going to see some front loading of capex happen, therefore you could see a stage being set for a pickup in the economy, and maybe some of these cyclical sectors might also contribute to earnings growth in this year.
Right, and the point that you made earlier about NPA resolution, which the government is trying too hard to come up with a solution, that instead of only banks or PSU banks would also be positive for the entire market because it could lead to fresh investments in some time?
Yeah, I mean, this NPA resolution is very, very important to unclog the so-called arteries of this economy. There has been a clogging of credit growth, and the sooner we do it, the better it is. Now, I don't know, the government is obviously now seized of the situation, but it will be important to understand and see how they go about doing this. There have been a lot of ideas that have been tossed up in the air, whether it's a bad bank, whether it is taking a few sectors or the top 40 NPAs and then resolving them, whether capital will be given to those banks who take an aggressive haircut, because unless you recognize and take a haircut, there is no point. How will you resolve, right? So you will have to first take the hard call of taking those hits, and maybe the 31st March this is a big issue.
Right. In terms of what's happening with banks and PSU banks, do you think markets is just awaiting for that particular number?
All right. So, Hiren Ved, talking about how important the resolution of NPA issues is going to be. Now, Hiren, you said that earnings growth is going to be led by financials. How do you see that earnings growth coming in until the NPA resolution happens? Or do you think the earnings growth will only be visible in the NBFC and the private sector bank space, which is perhaps not as badly plagued because of the stress assets issue?
No, I think, if you are looking at aggregate earnings growth, then it is important that the NPA issue get resolved. If you want overall aggregate earnings growth, if you also want the PSU banks to participate in the earnings growth story. Otherwise, whatever earnings growth that we are seeing is basically where existing healthy companies or banks are taking away market share from the private sector, and that's how they are growing. The system credit is not growing in double digits. It's still in single digits. But some of the more efficient players are growing their credit in double digits because they're taking away share from everybody else. So if you still want a selective earnings growth, then that is what we've been seeing of late. But if you want earnings growth to be more secular, then there is no way out but to get the NPA problem resolved at the earliest.
All right. You also said that some of these cyclicals are also expected to see an increase in their earnings growth because of the government going ahead and front loading its capex program. How much, do you think for sectors like cement, is there scope for pricing strength and, for better profitability? Because we have seen the volumes have been growing, but given the excess capacities in the sector, the bottom line is still subdued. Is that set to change, or do you see the excess capacities continuing for some time?
No, I think the sector has had excess capacities for a long time, but I think that there has been a lot of pricing discipline in the market, and at least in the last year they had the benefit of lower raw material costs. Now obviously coking coal costs have been going up, but I do believe that with government's focus on low-cost housing and front-loading of infrastructure spending, I do expect that you will see good growth in the sector as a whole. let's take something like UP, for example. It's a very big state up north. And now you have a fairly development-oriented government which has come there. Now, if they really start the development spigot in a large state like UP, then you will see the benefits of that starting to accrue to central and northern based cement companies as well. So there is an opportunity in that sector. It's a fairly consolidated sector, and you could see some significant gains come in there.
Right, but my question is that if the excess capacities will still be around, you said there's been pricing discipline, but when is the pricing power coming back to cement players, and when do you see a healthy and predictable improvement in the bottom line?
No, I think that we've been seeing a lot of M&A in the cement sector, and I think that will continue. And as capacities get consolidated, even though there is additional capacity, but this capacity is getting consolidated, and this consolidation of capacity which is likely to drive pricing growth or the ability of the companies to push pricing. That is what is likely to drive earnings. And then if volume growth also picks up during the course of the year, then that should also aid. So it should be, I think until recently we were seeing more a pricing-led growth in profitability. This year you should see a combination of volume and pricing growth, both.
All right, pricing as well as volume growth expected in the cement sector. But you spoke about how you expect the demand to pick up because of this affordable housing push that the government has come out with. Otherwise, the real estate sector is not really seeing a very big pickup. Huge inventories in some territories. The RERA is supposed to come in. So from the institutional side, do you expect the demand to really pick up? The affordable housing idea is great, but the supply so far has been very tight. Is this a pipe dream, or is it actually going to take off? And is there going to be a perceptible increase in demand for raw materials in real estate like cement and steel?
No, if you see at the housing industry, then essentially the slowdown has happened more at the top end or at the premium end. It's not happened at the affordable housing end, right? And I think that given the kind of tax incentives that the government has rolled out in the last budget and then post demonetization to fire up the housing sector, you will see supply beginning to come into that sector, because everybody would want to take advantage of the benefits that are accruing to people in the low-cost housing segment. And therefore, my sense is that supply which is tight, everybody was focusing on the premium end or on the higher end. That's where the slowdown is likely to be. But at the bottom end, I think you will see over the next 2-3 years, there will be a lot of supply and a lot of projects coming through.
All right, so we'll watch out and see how much of affordable housing announcements come through. What about the consumer discretionary stocks? Some of them have, gone back to the levels that they were trading at before demonetization. Do you think this is a secular trend where, this is a safe bet? You will see growth coming in because valuations are not really cheap here. So, do you think for consumer stocks, the story is going to be intact for, say, 3 to 5 years?
Sorry, I didn't get. Which sector were you asking of?
Consumer discretionary.
Oh, consumer discretionary. Yeah, I think consumer discretionary has bounced back as remonetization has happened. I think, so, as I was mentioning, I think demand was getting better. If you look at the numbers in Q2 last year, and also if you spoke to consumer discretionary companies, they had a very good October last year. But then because of demonetization in November, the consumer basically scaled back. But I think I would expect that the consumption should bounce back now that demonetization is behind us, right? And I think almost the entire remonetization exercise has happened. And I do expect that, demand to be fairly strong this year. Again, if monsoons are good, we've had one good monsoon last year and good agricultural production last year. If we have one more good monsoon, then there will be surplus. And I think that this government is also fairly pro-poor. So they're going to put a lot of money into the hands of the people at the bottom of the pyramid, whether it is through the DBT transfer and the focus of spending on infrastructure, etc. So I think that should kickstart the demand cycle, for sure, into the second half of this year.
Right, Hiren, so far consumer durables have been a structural story. At least companies that have made good brands, they have not focused on a good amount of leverage. Do you think that still continues? There is still a lot of unorganized market in most of the sectors which are listed, at least in the consumer discretionary space?
Absolutely. I think the big trigger this year for the consumer and the consumer discretionary space is going to be GST. It's going to be a game changer for them because, again, that's an opportunity for some of these companies to take away market share from the unorganized sector. So even if the overall demand is not growing at a very high pace, but there is a shift of demand from the unorganized to the organized. And that, to my mind, is what is likely to benefit this sector substantially.
Was that already seen in Q3, probably after demonetization, a little bit of pickup in the organized space, which reports numbers?
Yeah, I mean, there was, but some of that was also pre-buying. I think that what people were trying to do is that use some of the cash that they had and convert it for goods. So there was actually preponement of some demand that happened because of demonetization. So some sectors actually saw better demand coming in. And that's why, we can't say just from Q3 numbers. So Q3 and Q4 put together should kind of iron out, the complete impact of demonetization. And then maybe once the inventory is out of the system, then from Q1 and Q2, you should see normal demand flowing through.
Right. Within consumer durables, what would you be bullish on? So there are a lot of sectors, we can call AC, we can call a lot of other sectors. You can have a company like Symphony. Which sectors within consumer would you be bullish on?
So I think light electricals for sure. Consumer durables, light electricals is a sector that is likely to do well. I also believe paints should do well given the focus on low-cost housing. And there is always a kind of a repeat demand for paints as well. And then I think autos, so if we have a good monsoon, then you will see two-wheelers starting to do well. And, some of the auto companies should also start to show good numbers. So I think light electricals, paints, autos, all these areas should probably show good growth.
Right. In terms of autos, you would be bullish on both four-wheelers and what's happening in two-wheelers?
Yeah, so I think four-wheelers for sure. Two-wheelers, a lot would depend on how the monsoon goes. So if the monsoon is good and if the crop cycle is good, then you will definitely see, a pickup in two-wheelers as well.
Right. In terms of auto ancillary, a lot has changed in the last 3-4 years. A lot of these exports, auto ancillaries have done extremely well. Do you believe that, they would continue to do well? Some of the auto ancillaries are also interesting, which have global clients.
See, right now, if I think overall India should do well in ancillaries because India has definitely got a, competitive advantage in auto components. But right now there is some uncertainty with respect to the border tax, and we don't know how that's going to impact the final demand for auto components, especially from the US. But I think the broad, theme or trend that we've seen of MNCs wanting to outsource from India will continue because India continues to be a fairly competitive market in the auto component space. And I think you will see some consolidation and M&A in that space as well. We've already started seeing that. We had Motherson acquire a large company in Europe, and I think all the players would want to. Some of them will grow organically, but some definitely will also resort to M&A to grow in this sector.
And just a last word before we conclude. You mentioned about FDI, what sort of pickup you expect from the foreign investors. Can you just tell us, with the constant touch of your sales guys, what is the sense that you get on the domestic side, both PMS and probably the mutual fund business? Do you expect that also to continue to see the growth that it is already witnessing?
Absolutely. As I mentioned, I think, we've seen a structural shift in savings coming into equity markets, because I think people were over-invested in real estate, and I don't think real estate prices are likely to appreciate until all the inventory is washed out. So I think that, and with interest rates already bottoming out, I do believe that there is going to be a shift in asset allocation away from fixed income to equities. So I think both mutual funds as well as PMSs will continue to see significantly strong inflows even in the current year.
And just, the last 10 years sort of data that one would have for mutual fund or for PMS, or even the last 20 years, some of like Reliance are old, more than 20, 25 years in terms of some of their funds. So people have that confidence also now, which was lacking earlier?
Yeah, I think, some of the, top players in the industry have been around for several years. Like, we've been around for 15 years now. So, when you have a long-term track record behind you, and then there is a shift, there is definitely a sense of confidence that people have that, look, some of these people have been able to deliver steady compounding returns despite the volatility that we have seen in the markets and several cycles that we've seen in the markets. So I think now with access to long-term data that people have, the constant fear that people have that, wanting to time the market or corrections, I think there are enough data points out there to convince investors that if you're a long-term investor in equities, you can, still have a good compounding on your wealth. Irrespective of the short-term volatility and challenges that the markets might face.
Hiren, thank you so much for taking out time for us. Always good to get a perspective from you.